Welcome.
Welcome. Great to see
Mark, you there?
you. I'm here. Can you hear me all right? Can you hear me?
I can hear you now. Yeah, I had my volume on the computer turned down, but I'm ready to go.
All right. Well, good. Well, we're excited to bring everyone our next webinar and the ongoing list of them or saga that we're putting together. And today's is we're circling back to the advanced planning topic of disability insurance and long-term care insurance, because this is a topic that we've gotten a good bit of questions on, especially lately. So we thought it would be really relevant to bring you some detailed information around it. And just as a reminder, it's part of what we've been putting together for you on a weekly and a monthly basis. So each week we publish our Bare Facts Friday report, which consists of a few different parts. First is we break down the big news items of the week and condense those down for some information that's more easily digestible as opposed to focusing on all the noise. Then we give a bit of perspective about the markets and other topics, and provide some wisdom to help get through times like we're in right now. So appreciate all the great feedback that we've gotten on that. And then in addition to Bare Facts Friday, we've got the webinars like the one that we're doing here today. And the webinars focus on what we call your financial success matrix. And as a reminder of what that is it looks like this. It's this pyramid where we start at the bottom talking about some key financial planning foundations, really having that strong foundation to your ultimate financial success. Then we review different investment related topics, and we put out 3 of those so far. So be sure to check out the Bare Facts page and review those. And then at the top of the pyramid is what we call advanced planning. And this is more of your specific or unique planning strategies that are certainly relevant to everyone, but depending on your situation or your family situation, some things may be, I guess, more relevant or more pertinent to what you actually look to implement. So that's where we're going with all of this. But with that, we'll get started on today's topic, again, disability and long-term care insurance. And so we'll tackle disability insurance first. And the first thing to know about it is just what it is. In a nutshell, very succinctly, it's income protection for you. And really why you should have it, or why people do have it, is to protect what your earned income loss would be if you came down with a disability and if you were unable to work for any period of time, really. And so a lot of people think of disability as, well, I got in an accident of some sort. I got in a car wreck, or maybe I was injured at work and now I'm out of work for a period of time. And that's true. That can certainly factor in, but also be thinking just beyond those initial things that come to mind when we talk about disabilities. Some really common ones, in fact, some common ones, statistically speaking, are things like back injuries and arthritis and other musculoskeletal diseases. That's a mouthful. Same thing with cancer, heart disease, and even obesity is a really big one because of all of the ways that it impacts the body. So there's various types of illnesses that really result in any number of types of long-term absences from work. And it's all related to this topic of how can we protect that income if you are out of work.
Most of our most valuable asset is your ability to go out there and earn money. And if that's taken away from you, what are you going to do? And so it can be anything from, if you're a surgeon and you have arthritis in your hand and you're no longer able to perform surgery. I mean, that can be a disability that prevents you from continuing to practice the way that you were. Anything that prevents you from being able to perform your job the way that you otherwise would have been able to, or were prior to any sort of injury or accident or disability or disease or what have you, that prevented you from performing the way that you were, is where disability insurance kicks in. And for most of us that are pre-retirees, it still is our most valuable asset. The ability to go out there and earn money and make a living is the greatest asset you have currently, dependent upon your wealth, but for most of us out there that are pre-retirees.
Yeah, and I think it's also something that it's easy to take for granted, right? Is that, hey, if I'm in my working years, I'm just going to show up every day. I'm going to go to work like everything's normal, like I always do, and I don't have to worry about that. But there are, many unforeseen instances where things happen that can kind of alter or derail those plans. So there's a couple of statistics that we thought were interesting that we'd point out just to kind of get your mind going in regards to this topic. The first one is that more than 1 in 4 people today who are in their 20s can expect to be out of work for at least a year as a result of some sort of disability. That's a pretty staggering number, statistically speaking, because
that's aggressive number.
that,
Doesn't that seems extraordinarily high?
I wouldn't have thought it was that high.
Mm-hmm.
Yeah.
I mean, a whole year, being out of work a whole year because of some sort of illness or disability, 25% of 20-year-olds. I mean, that's a very high number.
Yeah.
It's shocking to me, really.
I mean, depending on, you look around whatever office environment you are in, and just count it out, you've got pretty strong odds relative to your peers.
Mm-hmm. Yeah. 48% of Americans, adults, that they don't have enough savings to cover 3 months. That is not shocking. In fact, that number is lower than I would actually believe to be true. Mm-hmm. Not among our clients, but among the general population.
Yeah. So all the more important to be thinking about, well, how do I protect that income in the event of something unforeseen?
Mm-hmm.
And then the next one, almost 6% of Americans will experience some sort of short-term disability, which is defined as less than 6 months due to illness, injury, or a number of other things every year. And as we mentioned on a previous slide, not all of these have to do directly with the job that you're actually performing. It's not like you got to fall in the workplace or something like that. It could be any number of things.
Well, that's not only is it not that, in fact, it's actually excluded from, from at least in disability insurance, because that's where workman's comp should cover you there. Yeah.
Mm-hmm. Mm-hmm. And then back to the financial aspect of it. This is a study that's a few years old, but disability as a root cause of bankruptcy is also pretty influential there and impactful. And it's oftentimes because of medical bills, obviously losing your job, and not only for yourself, but thinking about how it impacts your family members as well. And we'll talk a little bit about that, but it's all too common to where maybe one party becomes disabled, but then the caregiver becomes a spouse, an adult child, a parent, whatever it may look like. And so it can really have a drastic impact on an entire household very quickly.
Without a doubt.
Yeah.
So then moves on. So when you are buying a disability policy, there are just lots of things to consider. Right at the very top of the list is the definition of disability, whether it is your own occupation or any occupation. Your own occupation is what you want to buy. If you are a surgeon and you want to make sure that, perfect picture, you want to make sure that your hands and your ability to function mentally are there, and that if you aren't able to do that, then you're going to be receiving disability based upon the income you were making as a professional surgeon. Not any occupation is where, well, you could do anything. No, maybe you still can't be a surgeon, but you can be a cashier, or you could do any job. That is how disability from Social Security is defined. It's essentially you really can't do any meaningful employment. You are disabled to the point that that's not a possibility for you. That's how Social Security disability is defined. Private disability insurance policies make more sense in terms of what are you actually doing and protecting yourself against that specific occupation, or at least that class of occupation. without that, a lot of a lot of times the disability policy might not be worth anything. There's other worth much to you because you'd have to be totally incapacitated, not just unable to do your own job. The other important things to consider, like think about how long can you go without a paycheck before you have to have um, the disability kick in and begin to pay you some of the salary. Oftentimes, if you are liquid enough, if you have saved money appropriately, you might have a year or 2 years elimination period is what it's called, that you have to be disabled before something kicks in. Because if you're out 2 weeks, you don't necessarily need an insurance policy to protect you, at least not most of our clients and the people listening on the webinar today. You're going to have enough wealth that you're going to be able to supplement that for a period of time until a disability insurance policy kicks in. All of these things, own occupation, what is called the elimination period, definition of disability, all of that, of course, factors into the actual price that you're paying for the product. That, along with the amount of benefit that you expect to be receiving.
Mm-hmm. And what about that benefit in particular? Because a lot of people, especially if they're working for some company, perhaps they're offered or provided with disability insurance through their employer.
Yeah.
Let's give people a little bit of idea about what that typically would look like, and still maybe what they would look to supplement on top of that with a private policy.
Yeah, I mean, that's a great question. And first thing is understanding your work policy, right? Because they're all different. And so most of the time, here's how it's going to work. And this is very general, and doesn't mean, it's true for every company out there. Most of the time, it's going to be 60% of your base pay capped at a certain number. If you make $1 million a year, you don't get $600,000 a year coming in from the benefit of your disability. It'll be capped at, let's say, typically would be about, I've seen, between $7,000 and $12,000 a month is the most that you'll be getting. All right. Now, if you make it, and it's going to be capped at 60% of your base salary. So if you make $70,000 a year and you're in a commission sales job and you really make $250,000 a year, what you're going to be getting is 60% of that 70,000. And that's typically how it works. Second is it'll have an own occupation definition most of the time for the first 2 years. So if you're unable to perform your job for the first 2 years, the job that you were at for the first 2 years, then you will get the payment from the group policy, from the company policy. And then after 2 years, it switches to an any occupation definition of disability. So if something happened to you where you were disabled, permanently, and you would be paid from your own occupation for the first 2 years. And then if you still were unable to do any occupation after that, you would be getting paid, in this case for a lifetime or up until 65. Most of the time, disability insurance ends at age 65 where we'll quit paying a benefit.
Yeah.
You just got to, go ahead, Mark.
That's exactly what you were going to say. You got to understand the details of what you got. It's not enough to just say like, oh, I've got disability insurance, I've got that covered. That's the same thing as saying, I've got car insurance, I've got that covered. You've got to understand, the nuts and bolts of what's under the hood there, to know and feel comfortable with ultimately, are you protected? Because in Kenny's great example, depending on, your level of current income, and that level of income being not only what's customary and what you're used to, but also what you need to support your existing lifestyle. In the event that you do experience a disability and have additional bills related to that, you've also got to support your existing lifestyle. So really understanding what may or may not be provided through an employer's policy and how that works and what things are defined as, and then determining, okay, what amounts or what types of private policy might I need to layer on top of that?
Yeah. I can almost assure you that if you're a high income earner and an executive, a physician, the policy through your employer most likely is not adequate or enough of what it's not going to be what you think you would be getting.
Mhm.
And so it's just important to analyze that, understand, and then see if a policy, a private policy on top of that can make sense. Most of the time it does. It just depends on specifics for everyone's financial situation. If you're 58 years old, you make $2 million a year, and you got $10 million sitting in the bank, it's not as important. If something happens to you, you're still going to be okay and you can retire then. If you're 30 years old, you're a new physician starting out, you have huge medical bills, you're making a lot of money, but you don't have a lot of money, you need to protect that income because that is your livelihood. And what can you do? Number easy thing to do to protect it that's really cost, especially at a younger age, isn't that prohibitive, is looking into disability insurance, certainly.
That's great. Well, hopefully we're getting some good food for thought for people out there. And your homework is to go out and review what you've currently got, and then let's find a time to sit down and review it together to make sure that you're on track and well covered with that.
Definitely, definitely. And it's also there's other ways disability insurance factors in too when you're talking about businesses and business partnerships. Do you have, well, what happens if you're partners with someone and the person becomes disabled? You want to make sure that, are you going to be required to pay? Can I have a disability insurance policy that will then take care of that and his income in the event that, something happened? There's just a lot of ways it can be a tool to help people accomplish their goals, essentially.
Yeah, absolutely. All right, well, Kenny, I'm gonna let you take over and lead us off with this one with long-term care insurance as we turn the page.
Now we're on the flip side, the other side. So disability is for when you're working, long-term care is for when you're you're no longer, you're essentially in a nursing home. So there's a lot of, to me, confusion about long-term care insurance, um, in how it can best be implemented to help, to help the, the end user, the client, myself, whoever may buy it. Long-term care insurance, first of all, begins to kick in once you are unable to perform 2 of the 5 activities of daily living. And you can look at those being listed below: bathing, dressing, eating, continence, I believe is the technical term, or using the restroom, memory care, and then being able to move around on your own. When you can't do 2 of those is when long-term care insurance begins to take effect and pay. It's something everybody wants because so many people end up being able to use it at some point in their lifetime. Now, the question to determine is whether or not it is a fit for you and your family. It depends on your liquidity, your net worth, what you're living on. It depends on what is the cost of care in your area, and how important is it to you to make sure that you don't want to use your assets for that purpose. Because oftentimes, if you are a wealthy individual, and let's say you are living off of $300,000 a year in living expenses, and let's just, for simplicity's sake, say you're single, and something happens and you need to go into a nursing home. Well, a nursing home doesn't automatically mean that your costs just go up from what you were spending. You might have been spending $300,000 a year because you were jet setting around the world and traveling, and you had country club memberships and all this stuff, and big monthly expenses. Where if you are in a nursing home or in a assisted living facility, you're going to you'll probably be spending less money than that, even at a top-notch one. Even if you're talking at $20,000 a month, which is as expensive and high-end as they get, that's still not equaling $300,000 a year of expenses before. So in that example, that person might not really need it. It's the person who's living on, and let's say $100,000 a year in retirement, and they're married, and something happens to one of, either yourself or your spouse, and now you have $100,000 because you're going to still want to live a lifestyle, live for your own money. maybe it's a little less, but you just threw on top of that another $100,000 expensing for nursing care. And that's where you start to spend double of the amount of money, and it's, can eat away at your assets, so that you potentially run the risk of having nothing left. I mean, to me, it just is very specific. The longer the benefit, the more advantageous it is going to be for any individual looking into buying long-term care. Because for most of us, the risk of long-term care is not that you go into a long-term care facility and you pass away in 18 months. I think the average stay is like 28 months or something like that.
Yeah,
That's not a risk. Is that right, Mark?
yeah.
Yeah. So that's not really a risk to a lot of our clients. If one or both and you had to double your expenses for a year or 2 years, you'll be okay. The real risk is living 15, 20 years when you have, you have Alzheimer's at 60 and you live to 90. I mean, now that is the real risk of having to pay for that for prolonged periods of time as it continues to increase in price every year. And it's, it's something to look into for everybody to see if it makes sense, but it's not just the be all end all that everyone should have it. It's really got to be specific for you and your needs.
That's a great point, because I feel like a lot of the questions that we get are this feeling, I have to have it. It must be in place, this long-term care, because I talked to a family member, I talked to a neighbor, what have you. I think you did a good job, kind of dispelling some of that misconception there. It's a really good thing for a lot of people, but dependent on what your current financial situation is, as Kenny just outlined. Because, as we say here at the bottom, people are living longer and those medical costs are only increasing, but it's just about finding that right balance here. To that point, I like this slide. In 1900, which is around where this guy was, the average life expectancy was just shy of about 50 years old. And fast forward to today, it's about 79. But many, many people are far exceeding that. This gentleman right here actually set the world record for oldest marathon runner. I believe he was 101 years old. You heard that right, 101 years old when he ran his last marathon. But it's just a unique example to show, as I'm sure we've all seen and experienced in your own families or people in your network, that people are just living longer and longer. And so making sure that you do have the right plan put in place and the structure around it to be able to take care of you, whether it's the savings that you've accumulated or something like long-term care insurance, depending on your situation.
You got to factor, you got to plan for that, factor that into scenarios that you're using. What if I go to a long-term care facility and it costs $100,000 a year, and my wife is going to still need to spend, $70,000, or my husband's going to still need to spend whatever it may be, and let's factor that in, and let's put that in a scenario to plan. Is our plan still sound that it can uphold, or it can withstand a prolonged stay in the nursing home or so forth.
Right. And there are an infinite number of statistics out there as it relates to long-term care. You could almost, dice it any which way you want, but here's a few. Most people are elderly, and while we don't consider 65 elderly, because that's the break point for what they put together, but 2/3 of people are over the age of 65 are utilizing long-term care, but 1/3 are under the age of 65. So whether it's Alzheimer's or early onset dementia, or even a medical mishap comes about. My wife is in the medical field, works for Shepherd Center, which is a brain and spinal cord injury place, and unfortunately, things happen. And believe it or not, there are people who are 40 years old who need significant long-term care just due to the unfortunate situation. But in addition to that, as we talked about earlier with the activities of daily living, again, the older you are, no surprise, the higher your odds are for needing assistance with that. And I thought this was interesting. 1 out of every 5 households are involved in caregiving to someone over the age of 18. So similar to with disability, thinking about how this could impact your family members in terms of are we paying for outside care, or does that now fall on a spouse or another family member to do that? And are they able to? Are they physically able to? Are they financially in a position to not work if they're still of working age? All those factors, should come together. And yep, this is what I found too. So the average length of stay is about 28 months if you find yourself in some sort of assisted living facility. And there's different nuances. I don't know all of them, but there's a difference between nursing home and assisted living facility or a community facility, things like that.
Right. Um, yeah, the main thing is as far as long-term care, when it comes into effect, long-term care insurance is being unable to perform two of the five activities of daily living.
Mhm.
And you can understand that, to not be able to perform the two of those of the five, you're pretty bad off. I mean, it's not typically someone that is, pretty healthy and they sprained an ankle, right? I mean, it's someone who is mentally incapacitated, has serious or terminal illness, and that's why the length of stay is so short. And
Mhm.
that's where you just got to think about, well, what makes sense from a family perspective? Do I really need to insure against uh, 2 years of 2 years of living in an assisted living facility? Is that something that I need to pay, whatever it may be, 500, 600, $1,000 a month to insure against, down the road when I'm probably going to be in my late 80s or mid 80s? There might be other ways to fund that. There's there's things now called longevity annuities. Like, as an example, you could put away a couple $100,000 and it would buy you an income stream that begins when you're 85 years old. That would be, substantial. Obviously, depends on your age now. There is life insurance long-term care hybrids where you might be able to use the benefits of a life insurance policy for the purposes of long-term care. There's a million ways to really fund your long-term care insurance. There's, you can just self-insure against it. I'm 50 years old, let's say 55 years old. I am worried about it, but instead of paying $1,000 a month to an insurance company or whatever, I'm gonna pay $1,000 a month to myself and separate in my long-term care fund. And if I never have to use it, great. My family will get more money. But if I do, I've got that protection that's there for me. There's a lot of ways to think about it and protect yourself.
Yeah, absolutely. I think that's a nice segue into some of our key takeaways today as we wrap up. When it comes to both disability and long-term care, look, the odds just favor increasingly us being impacted in our lifetimes. I think we've shown that. Um, a lot of people are unprepared financially, or they just haven't really fully given consideration to the impact that it can have and how they plan to overcome that, both on themselves and on their family, because these are both also pretty personal events. If something were to happen to you for either one, it's a personal thing, close knit. And then, as we mentioned, just considering the increased financial burden and the impact that it can have on your family or other caregivers. I think that's just
Yeah, I mean, it's just something to look into. And like, the idea of these webinars is not to obviously sell you a disability policy or a long-term care insurance policy. It's to inform you and make sure that you're thinking about it. And if we haven't thought about it with you, then maybe it's time that we should, and let's sit down and just revisit the initial plan, whatever we, had done years ago, because it's always open for discussion. Things change, and just making sure this is stuff that you thought about. You're either okay accepting the risk, or maybe you should insure against that risk, but just it's specific to each person, each family.
yeah, no, that's so true. It's not like we're out here just trying to sell you disability insurance. It's about making sure that you've considered what the factors are that can impact you.
Right.
And that's true for all of the webinars that we've been putting together, which you can see here by visiting our Bear Facts page on our website. It's at bearwealth.com and the Bear Facts. And you'll be able to rewatch this one, to send it to your friends and family, and as well as the other ones that we talked about. So, any other parting thoughts for today, Kenny?
I think And that's all I got,
All
at
right.
least right now. Now, thanks everybody for listening. Yeah, I appreciate it. And we're here for you.